Well, not only did Piramal Enterprises today register its best top-line growth in 16 full quarters, but the company's also announced a mega fundraise for some 5,000 crore rupees. And looks like the interest areas for Ajay Piramal seem to be financial services as well as the pharma company. So what's making him so optimistic? Well, that's exactly what ET Now's Ashwin Mohan asked him.
We are in, as I said, all the three segments: pharmaceuticals, financial services, and information and data. We are fortunately in a space where we are seeing good growth rates in all of these spaces. The fundraise would be used, yes, for financial services, where we are seeing a very healthy increase in our loan book. In fact, if you see our loan book and the quality of assets that we have has been really good. Return on equity for our loan book has been at over 25%. The gross NPA levels are only 0.4%, and our book today is about 25,000 crores as on March 31st, 2017. So there is a good demand in this space, and we have also gone into housing finance, as I said. Therefore, the requirements are there for financial services. In pharmaceuticals also, in the last year, we've made several acquisitions, and these, as we look into the future, we feel that there is a good potential to grow in these areas as well. Just for example, in consumer, the OTC space, which we are in India, most of the people were affected by demonetization. But in spite of demonetization, we've had a growth rate which is in excess of 40%.
RBI has now been given greater powers to, direct stressed asset resolution as part of banks' procedures, and also, in fact, initiate insolvency proceedings as and when it deems fit. But sir, the one buzzword in the banking circles is this creating a conflict of interest? Because this seems to perhaps demonstrate that the RBI has more commercial expertise than banks themselves. What's your take? Because there are two sides to this debate.
No, I think one thing is that we have to recognize that the level of stressed assets in the economy is very high. This has been on the top agenda, I can see, of the government right from the time that this government has taken over. It's been the top of the agenda of the Reserve Bank as well as of all the banks that you talk about. I think what the RBI has done is really to insulate to some extent the decisions that the banks make to be actually governed between RBI and the banks, rather than getting many other authorities coming in. One of the big constraints I thought about, the banks were hesitant to take decisions on the amount of write-offs that you would have had to do for an NPA would be the fear, as they say, of the three C's, whether it's the CAG or whether it's the CVC. And so these issues, I think it's taken, the RBI in fact has taken the onus on itself for quick resolution of this. And I think it's a bold step, it's in the right direction, and which will only encourage more resolution of the problems. And this is where even people like us who have now got this stressed asset fund, there will be actually quicker resolution and therefore greater opportunity.
One more aspect, and this is, a wake-up call that came in all of a sudden from the chief economic advisor when he said recently that analysts, experts and banks are bending backwards to be in the good books of the regulator and the government. Now, that was quite a sudden statement. What do you make of this observation coming in from an authority as high as the CEA?
So it just shows that, I think the Reserve Bank is now pushing that you have to solve the NPAs, or the recognitions will be much more sterner, faster than what it was before. And therefore the banks will need to fall in line to understand that the Reserve Bank is becoming tougher on recognition of NPAs, and hence resolution of NPAs is what needs to be done.